Hi everyone, this is Nick from Coin and Paper, and today we're going to talk about a health savings account, and specifically getting ready for tax season. So an HSA is a health savings account, and you're eligible to have one if you have a high deductible insurance plan. So you would know this through your employer, and if you're not sure, you can ask your job, but basically an HSA is a savings account that allows you to save money for high medical expenses or any medical expenses. So what I did here first is go to Google, and we typed in who is eligible for an HSA, and so we'll read this together. It says to be eligible or an eligible individual for and qualify for an HSA, you must meet the following requirements. You must be covered under a high deductible health plan described later by the first month, etc. So as far as a high deductible health plan, so I went to this website, the IRS website, and I looked through it. So here it says a higher annual deductible than health plans maximum. But let's look for actually what is a high deductible plan, and that's it right there. So high deductible plan is one that just has a higher annual deductible than typical health plans. But again, this is something you would know through your employer, and if you do have a high deductible plan, then they should let you know about the HSA that's available to you. And basically you would sign up, and I can actually show you one that I have quickly here. Now let's see if I can just type it in. There we go. So health equity is one, but there's all kinds, and this is through your job, so they'll give you a specific one. But health equity is one that I have through my employer. So essentially, once you have an HSA, there's limits of how much you can put in there. And so it all depends on the year. And so what you put in there is called a contribution. So are contributions to an HSA tax deductible? So the answer is yes. So this is said yes. So it says pretty much yes. And so essentially, you need to know next what are the maximums that you can put in there, the highest contribution. And like I said, it's per year. So let's see, how much can I put in my HSA? So this should say the year, and it does. So you still have until April. So this is old, but it says here $3,300 for 2014. And let's just see what it is for 2016. So HSA 2016 contribution limits. So for this year, or actually last year, this year is 2017 when I'm recording this, for a single person, they can put $3,350. For a family, it's $6,750. So you would know which one of these you qualify for, but we're going to look at an example today of how you would manage this process. So it's important to start itemizing or at least organizing your medical expenses. So you can go and research through the IRS exactly what's qualified, but more or less I'm going to simplify things right now just for the sake of this video, but I'm not a tax professional, so don't take my specific tax advice here. But basically you organize your medical expenses. So what I do for me is I put this on a spreadsheet. So I have HSA summary here, HSA detail, 2 tabs. There's other tabs here, but this is for our other videos. And I'll give you an idea of how I organize mine, because I have a high deductible plan. So what I do is whenever I go to the doctor or the dentist or even the pharmacy, I make sure I keep track of my expenses. And so what I did here is I organized those expenses into those categories. And you don't have to, but this helps me be a better accountant, just in case someday I ever get audited. I have the history here. So for dental, just a quick summary here. For last year, I spent probably about $1,300 going to the dentist for various things. And this is myself and my wife. And so this is the cost for that, so I keep track of that. And by the way, if you forget to keep track of any of this, you can go to the dentist or any of your doctors or even the pharmacy and ask them to give you a printout of all the things you spent or all the expenses you incurred in 2016 or any tax year. And they'll be more than happy to give you a file, and you can just look at that sheet and then type it down here if you want to. So as far as medical, so you just put that here, you just put detail, and anything that's highlighted, what I'd like to do is just make sure I find that in my credit cards or for my bank account just to confirm that it ties. So that's just an extra level of accounting that I'd like to verify that, that I have everything. And the main reason for that is because the money that you put in your HSA, that is all tax deductible. So that's the biggest benefit. Because you have a high deductible plan, you're more than likely going to spend a lot of money out of your own pocket. And those dollars are after tax dollars. So you're spending that from your paycheck, and that could be pretty expensive. So what the HSA does is allows you to basically get a tax deduction for that. So you can deduct how much you contribute from your income, so you don't have to pay taxes out of that amount, and then you use that amount to reimburse you for the expenses you paid out of pocket. So basically what that does, and put simply, is what you pay for medical expenses, you're not paying taxes off of it from your paycheck. So it saves you money. Depending on your tax bracket, it pretty much saves you about that same tax on your expenses. So here I have pharmacy and vision. So anything, pretty much most medical expenses. So you look at the details. So some cosmetic things are not eligible. So just the important things, to just put it simply, is what's qualified for you to expense. So once you have your expenses in a document or wherever you put it, then the next thing is to just make sure you manage or account for how much you put in your HSA. So like I said, for 2016, the maximum was $3,350. So you don't have to put that entire amount. But remember, if you do put that entire amount, that's what you can deduct from your paycheck, or actually from your tax, your taxable income. So say if you made, let's put simply, we'll just put 100,000 because that just works nicely. You made 100,000. That's your taxable income. Okay, just put simply, we're not looking at any other deductions, but that's your adjusted gross income. So that's what you pay in taxes. So you pay taxes on that amount. But if you have an HSA, then and you contribute the full $3,350 for 2016, then essentially you can deduct that, and then so now you pay taxes on $96,650. So you actually owe the government less because you're paying on less income because of the HSA. So that's the benefit there. So what happens is once you put in the money, what you could do is use that money to reimburse yourself for the expenses that you paid in 2016. So far, for my quick analysis here, I spent about $2,500 last year in medical expenses, qualified medical expenses, and I did put in $3,350 today into my HSA for last year. So you can put in the money up until tax day of this year, so 2017, up until April 15th, that can contribute to last year HSA maximum requirement or contribution limit. So with that said, if this is what I end up paying, I'm going to, even though I put money in there today, if this is what I am qualified for as for reimbursement, then tomorrow or whenever the money goes into the HSA, I'm just going to withdraw it, and basically I'll have $772 left in there, and then $2,577 back in my account. So I pay myself back for these expenses. Now the $772 there, that stays in this account, and that's recommended. And basically, I would recommend putting in this money every year, even if you don't have any medical expenses, because you can use this for medical expenses in the future. So hopefully you're healthy all the time, but maybe in some years you'll actually have high expenses, and so this can be used for the future. And some HSAs actually allow you to invest your money in that account, and that's something I'm definitely going to explore. But the thing is, you need to have a minimum of, I believe, $2,000 in order for you to qualify for that. So if you have $2,000 or more accumulated in your HSA, then that's something that'll be interesting to take a look at. But the goal here is to show you how to organize your HSA for taxes, and Again, this is for those of you who are eligible to have HSAs, which means you need to have a high deductible health insurance. So thank you and have a good day.